Good morning, people. Let me know if you can hear me here. Hear me. Um, Let me know if the sound is on so I don't have to do this again where we yap for like 15 minutes and then we get nothing out of it, you know? Let me know. Let me know. You can probably see the charts here. This is okay. Perfect. Thanks for the thumbs up, PD Jim. Welcome everyone. It is October 24th, right? October 24th. Appreciate it, Mark, Andrew. Thanks everyone. October 24th, Tuesday. Wow. So let's take a look at what we got here in the market on the news front, right? Some of the movement that happened yesterday and overnight, and then we're going to wrap it up with a trade plan on the S&P 500. First and foremost, bonds, right? Bonds look like they're topping off. The U.S. 10-year, you can see here on my screen, hit that 5%, just a bit over that 5%, and started peeling back from that area, right? It was a long-anticipated region to see, and from that area, right, we're getting this pullback, and a lot of people are looking at this as a potential downside slip in yields, which puts upside pressure in bonds. So pretty wild swings in the bond market and the yield market, with two notable names in the industry making fresh calls on the sector, right? The pairs statements also continue to come hours apart from each other, as it did on August 3rd, when they both became growling bond bears and added to the pressure on the long-term treasuries. And since then, the 10-year yield, like we've said, has nearly jumped an entire percentage point from 4.07 to the top of 5 and a bit yesterday. So 30-year treasury yields, 30-year treasury yields went from 4.16 to a high of 5.15 in just under 2 months. So two of these individuals, right? We got the bills. So Bill Ackman, an old tweet: if long-term inflation is 3% instead of 2% and history holds, then we could see the 30-year 3% plus 0.5%, the real rate plus 2% term premium, or 5.5%, and it could happen soon. That was his math and logic behind that. There are many times in history where bond markets reprice the long end of the curve in a matter of weeks, and this seems to be one of those times. Bill Gross said 10 years overall bearish, right? 10-year yields. Bill Ackman also said we covered our bond short. This was, I believe, yesterday, if I'm not mistaken. And there's too much risk in the world to remain short bonds at the current long-term rates. The economy is slowing faster than recent data suggests. Bill Gross also said regional banks' carnage and recent rise in auto delinquencies to long-term historical highs indicate that the U.S. economy is slowing significantly. Recession fourth quarter on bonds. Invest in the curve. Various combinations 210. 5.2 should go positive before year end. I'm buying SFR H5 SOFR futures. Higher for longer is yesterday's mantra. This is what Bill Gross said. So remember, the last time rates were this high was pre-2008, and it seemed like the bills now feel that the rout in Treasury in the aftermath of COVID pandemic has gone too far. So markets appeared to have adopted the view on Monday, with yields on the 10-year shrinking about 20 basis points to a low of 4.8%, trading right now 4.84, you can see on my screen. But it's necessarily too soon to be calling this top, I think. Term premium is the word on Wall Street, as well as regular investors that are looking at related bond ETFs, but there are many factors that can play and have impacts on the benchmark yields. Among them are forecast and actual economic data, debt sustainability, and geopolitical developments, with eyes tightly kept on the Federal Reserves and words from the officials and financial conditions. Next week we have the FOMC rate decision, right, on Wednesday, November 1st, actually. Now, there's a pretty interesting correlation here between equity markets and bonds. If we take a look at triple Qs and TLT, I'm slightly bullish on bonds. I have been for about a week or so right now. But I think we can see that pop in bonds. We've ventured too far. These yields have gone a little out of control. And as you can see here on the screen, we'll be talking about earnings as well. So I think a little bounce, that's the wrong thing. I think a little bounce in yields isn't out of the question necessarily, but the jaws between TLT and Triple Q have widened extremely far. They're so wide that I can't even see them on this screen. Where's TLT? There it is in freaking orange. Alright, well, I gotta do something about this, it seems. Let's see. They're so wide we can't even see them. They're off the freaking screen. Anyways, you can see this is the orange line. I don't know why this is not navigating properly, but this is the difference. This is the jaws widening between triple Qs and TLT. You can see that we started diverging aggressively in 2021, and since then, right, TLT has brought the market into its vicinities, and the huge divergence in January 2023 when bond prices continued to drop while the overall equity market actually started rallying pretty aggressively. So these massive widened jaws, right, I can see that prices could lead somewhere into the middle, meaning a potential upside medium term for bonds before that continuation lower, and that's something that I'm looking at right now, right? Yields are looking like they're slumping a bit, and that's the notion that I'm looking at. Now, we also have Microsoft, Google, and Visa today that are reporting earnings after the bell. We got Coca-Cola here pre-market before the bell, but this week we have a plethora of different tech names that are going to be reporting earnings, and I think it's pretty important to take a look at that as well. So let's see. Take a look at my little notes here. Where'd that notepad actually go? So Google's reporting earnings after the bell today. So is Microsoft and Visa, right? Google, Microsoft together, just these two are over 10% of the weight of the constituents of the S&P 500. And I want to get this chart back in order here. And realistically, both these tech names are probably going to be talking about AI a decent bit throughout this earnings call. You can see that big tech has barely done anything. You can see right here, right, Microsoft had just been rotating in this very wide 30-point range for the last few months here, right, after peaking at that like 360 area, pulling back slightly. We're holding that 310 extremely well, right? They're going to be talking about AI. Revenue is expected to grow 9% year over year on Microsoft to $54.5 billion, and earnings per share are expected to go up. Now, the forward guidance is going to be the most important aspect of this. Everyone has eyes on forward guidance, right? What they expect for earnings in Q4 and in 2024, which are actually expected to grow very well. So this could be a very pivotal moment in this current market condition that could turn things around for the upside, right? I think that in the short term, over the next few weeks, there's going to be, I think, a little more panic selling, and those dips are going to get bought. So tech is going to clear that path to open our eyes from this earnings period as to where the next move looks like it's going to go into 2024. Google also, earnings projected to increase 37% to $1.46 from analyst estimates. Revenue to increase 10% to $76 billion for the quarter. And then ad business is expected to increase 8.6% to $59.1 billion. You can see how big of a chunk ads are for Google in terms of revenue. And then YouTube to increase about almost 11%, 10.7% to $7.6 billion, right? AI, GPT-4, OpenAI's GPT-4 and Gemini language model are probably going to be discussed, and everyone is going to have eyes on the forward guidance for this. So Visa as well. Visa's reporting earnings is the 14th largest constituent on the S&P, and it makes up 1% of the S&P. 2024 expected revenue to increase almost 10.5%. There's the thing with Visa is usually it was one of those safe haven assets, safe haven equities, because it is a massive credit card company. But the thing is, like, delinquency payments are really flooding in, and higher for longer rates might put some downside pressure on this. So we'll see what the forward guidance looks like, and we could see actually turbulence from that. So all in all, right, the last thing that I do want to talk about here is the crypto rally, right? A lot of news today because BTC on the forefront. Crypto investors wake up happy this morning because we got this massive turbo rally. You can see this is a daily chart, right? I was actually talking about longs under 25K on crypto just a few weeks ago, realistically, and this could be the start of a pretty strong bullish move. So bulls are back. Cryptocurrency briefly tagging that 35,000 on BTC. Traders continued a wager on the potential approval. That would be the first U.S. exchange traded fund that invests directly in the token. Over the past month, growing investor confidence in the imminent approval of BTC Sports ETF has driven considerable momentum toward BTC. Matteo Greco said this, analyst at Feinkia. This combined with scheduled BTC halving in the latter part of April 2024 has prompted investors to favor BTC over other digital currencies. So nice little rally here, right? Stocks related to crypto like Coin, Riot, Mara, right? They should be experiencing some kind of upside momentum here, right? Coin is now up. Pre-market here has gapped up, right? I was looking at this. I had a little long position before. I actually cut it before this little pop, right? I don't think I bought enough time on Coin to kind of wait for it to jiggle around, but this upside momentum can continue in these individual coin names. So the last thing that I do want to talk about here is going to be the equity market, right? Let's take a look at what we have in terms of equities here. So equities in the S&P 500 futures, yesterday we had a pretty interesting move overall, right? 3,000 market sellers at two different levels, 42, 30, and 35, right? They prompted that initial sell to the downside that opened up, and then a massive bid happened into the early session, and we got that rally. Now today, right, there's a massively important level in the mid 40s where this volume drops off from this coloring down into red. The buyers are going to want to sustain these regions, right? There's a lot of dip buying in that area, and on Friday's close, that was actually the 8,000 sellers that came in at that level. So huge amounts of buying, and that's going to be an order flow pivot, 42, 45-ish area, plus or minus 2 points. Anything below, we're probably going to clear the auction. Anything under 35, I think we're going sub 4,200, even on this session. I'd be pretty cautious going into this, right? There is some resistance around this 65. They might want to go tag that mid 80, low 80 before we see some of that downside, but as it stands right now, longs above that 45, I think it's going to be pretty difficult for these bears to really get active unless we break that area. That's what we're going to be doing. That's what we're going to be talking about in our live trading room. We're going to be opening that up, and tomorrow we're going to be doing our live recording of our futures course part 2. We're going to be breaking down volume profiles, directionality, and more. So check out community.tradeproacademy.com for more. This is a lengthier update. There was a lot to talk about. Let's see some questions. Why you never cover CL like ES on your YouTube videos? Because Z, I don't trade oil at all. So there's no reason for me to cover it because I don't use it. I don't trade it. I'll swing trade it here and there, but I don't have understanding of it. Like trading one asset versus the other, right? I don't really have too much opinion on it. I like ES because it's extremely liquid, more liquid than CL in terms of volume, right? More volume-esque, so yeah, that's that. So enjoy. We'll chat soon. Let's open up our live trading room, and we'll